Hi, everyone. Today I want to talk about what hope is telling us. Then I want to go over a few different charts real quick. And then once again, I'll show you my positions going into tomorrow. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open and Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So I found this today and I thought it was quite interesting. They call it the HOPE concept for the economy, and that stands for housing orders, profits, and employment. So what we've seen so far is that housing and orders have dropped, and they say these fall in order. We saw a peak in profits in June of 22, so profits have moved down slightly since then, and they're saying they expect this to continue, which I don't think the market has priced in quite yet. And then they expect unemployment to rise and jobless claims to rise along with it. And that will be the full signifier that we are in a real recession. And that should finally give us the full downturn that markets are going to do, in my opinion. And we can get that real bottom and start to move higher from there. They mention that interest rates don't hit the economy all at once. It hits it in segments, and it goes usually in the order of housing orders, profits, and employment. Then they basically say what I already said. Housing has moved down, orders have moved down, profits have peaked, and they're waiting for unemployment to start ticking higher. Once we do start to get that tick higher, then we should expect the economy to continue to slow and the stock market to start moving down with it a little bit more aggressively than we've already seen. Moving over to the charts, we've talked about this in quite a bit of detail since the markets have closed, but I do want to touch it one more time here. It is worth noting that on the weekly chart, we are getting higher RSI readings. We did get oversold conditions in May and June, and we did not get oversold conditions here on the SPY in October. And we actually got a higher RSI reading here. So interestingly, we are showing a little bit of strength on the weekly chart, so just be a little bit cautious of that. I know I am bearish and I've been talking about it for a while. We're at resistance. We do have the 55-week moving average sitting up here as well, and I do expect that to act as resistance. I think we're going to fail, maybe go just a few dollars higher and then fail from there. We've talked about that quite a bit. If you want the shorter term charts, definitely check out my last two videos. But right now, looking at the weekly, there is a little bit of strength here, and it's certainly possible we get one more week of push up before this does fail. We also have the 200-week moving average here, which we already tested once. And you can certainly expect that we're trying to build a little bit of upward momentum here in the short term and get that bigger collapse to really create the down move through the 200. The 200 definitely creates quite a bit of support, and it does take quite a bit of volume to get through that to the downside, which I do expect is going to happen here based on this chart. We've been looking at the top of the pre-COVID high as a potential bottom, maybe even slightly below that down at 325. So somewhere between 325 and 340 would be a pretty decent zone for support. And then we have the highs going back to July of 2019, which also could be a decent level at around 303, maybe down to 300 if we get into that area. That would be another step down in my opinion. That's definitely a lot of down move from here. I think the short-term target's got to be between 340 and 350 from where we are now. If we get below that 200-week moving average, you have to start looking at these lower levels of support on the weekly chart for potential turning points. Moving over to the NASDAQ, this is a little bit harder to look at on the weekly chart because I do quite a bit of short-term charting on this as well. We've talked about the head and shoulders type pattern that it looks like we're building. We're in this downtrend and we've had several interactions with downtrend lines. Does look weak, but what I do want to highlight here is that we are right on top of that 200-week moving average, currently sitting at 280.76. We did get a slight tick up on the weekly momentum, and again, similar thesis, we might overshoot it here just slightly, maybe by 1 week or a half a week. Not expecting a whole lot of upside, strong resistance in this 285 zone, and then I would expect it to fail below the 200, triggering that more significant down move. And then we're looking at that pre-COVID high at 235 as the next level of support, and that would be a good price target to look for once this up move does fail. Moving over to the Russell just for a moment. Similarly, we've been all around that 200, above and below, gapped through it a couple of times already, pushed really strongly through it on the last week. You can see we've already had 2 up weeks of momentum, and you have to think at this point that we're going to be coming into resistance really shortly, probably going to get a top at the same top that we had here previously. So you get maybe another $1 or 2 of upside, maybe 3, and then you get the fail from there, come back and retest this bottom, Not as low of a price target here for the Russell. The Russell has showed significant strength here recently, and I would really only look for a 275 price target on that. This does kind of look like a channel at this point. And if it does bounce at that point and continue higher, you have to assume that the Russell is going to outperform, at least in the short term, for the next maybe month or so. Moving over to SMH, looking at semiconductors just for a moment here on the weekly chart, you can see the 200 acting as support on the weekly chart, currently sitting at resistance. I have resistance at 229, multiple wicks through that level, acted as support here previously. You could even move it down probably a little bit down to 226. You can see a little bit clearer guidance there. Support here, got the candle break on the weekly chart through it. Did push really hard through it on the down move in August. Not hugely surprising there. But at this point, you have to say we're at resistance, looking at that 55 EMA on the weekly. But we are stuck between that and the 200-week moving average. I do prefer to use EMAs here, and I have the 144 EMA sitting right at resistance as well. So we have the 55 and the 144 acting as resistance, in my opinion. And then if we get a rejection from here and we get below the 200 and stay below the 200, you have to expect that we're going to be moving lower, and probably significantly so, considering the run that we've had from the pre-COVID highs. That was all the way down at 151. If we get a push back to that level, which there are some gaps back in this zone, you can see right here, 153 all the way up to 155. If we get all the way back down there and fill those gaps, it's certainly a possibility, which would be a huge move lower from where we are right now. It is interesting to see that RSI here, going from the low that we had in June, basically at the same level that we had here in October. So lower price action, but same RSI readings. And then we did get a pretty significant push higher here in RSI. But at this point, I am bearish, so I would expect this to roll over, and I would want to see that RSI starting to create divergence to the downside, more similarly to what we saw here in November of 21 into January of 22. Moving over to XLP, consumer staples on the weekly chart, I do want to highlight here we have consistent steps down. Does look like it's getting ready for a bigger step here. Maybe down to 272.50, maybe all the way down to support. Probably not in the same week, but certainly possible. Down to that 70 level. If we do get a break at the 70 level, then it's going to be quite a bit of downside from there until we get some serious support, maybe down to 68.75 or the previous low here at 66.50. Either way, there's not a lot of upside potential. Strong resistance at 77.50. We've tested that multiple times here at this point. And if this starts to break down, one of the stronger sectors here going into the end of the year, that should lead the stock market and the S&Ps a little bit lower here, at least in the short term. Moving over here to stocks above their 20-day moving average. This often gives you a strong indicator of when you're seeing tops. And basically what we're seeing here is that we are at the top. So anytime we get into this 85 zone where we are right now, that's pretty much the top. Doesn't mean it's going to happen immediately. Could go sideways for a couple of weeks like we did here in October and November. Did do similar things here in March of 21. Couple of weeks here in August of 22. But we're in that zone, indicating that we're pretty much at the top of the move, and you shouldn't expect any major pushes higher from here, at least in the short term, before we get at least some kind of retrace and a continuation, if that is to happen. Like I said, I'm still bearish here, and I think we're going to move down more significantly, but you would expect at least a short-term retrace and push higher if you are bullish in this scenario. Similarly, on stocks above their 50-day moving average, we are pretty close to overbought. Not quite there. This could certainly go up to this 85 to 90 zone, currently sitting at 76.19. So this could certainly go just a little bit higher, but if it does, it's definitely not going to stay there. That's generally the zone where we get downturns, even if it's just a slight move lower, like we did from April to May of 21 here. So 50-day moving average showing just a slight push higher potentially. It could absolutely turn right where it is right now. It's done that before on the doji that we got, but it's not impossible that we go slightly higher before we move down, getting that bigger push down. Moving over to stocks above their 200-day moving average. This one's actually a little bit more interesting here. So we had the August high, and this November high actually created a slightly higher high on this chart. And then we gapped up really significantly from the first week of January to the second, gapped up and finished pretty much at the highs. So this does show a potential for a little bit more upside, not showing exhaustion the same way that the other charts are. Again, the 20 is still showing that we might get a short-term retrace, but we do have to be open to the fact that the 200 is showing some strength here. And if this does not move down here soon and get below this previous level of about 46, then we might be entering a longer term bullish market. I do want to hit some shorter term charts just for a moment. We got the 2-year bond yield on the 4-hour chart. I want to show that we are breaking out here a little bit to the upside, showing some strength on bond yields. And bond yields always put pressure on equities. So we've had this big down move on bond yields, allowing equities to rally pretty aggressively. It does kind of mimic the dollar a little bit. You can see similar patterns to the dollar in the 2-year yield. But right now, it looks like the 2-year is breaking higher, something that the dollar has not quite done yet. It does kind of look like it's setting up to do that. We've talked about that on other videos. But right here, it looks like the 2-year yield is looking to push a little bit higher. Not quite sure where. You could certainly expect maybe the 200 moving average does correlate with the EMAs that I like to use, somewhere in that 4.3%. Could overshoot that, kind of like we did here, get back up to that 4.4%. But if we do see a significant move higher here in yields, that's definitely going to put pressure on equities, and that supports my thesis of stocks moving down over the course of the next week. Moving over to the 10-year bond yield, similar story here. It looks like we got a slight breakout just above this resistance line, gapped through it here on the last candle of the day. Bonds looking to go lower and yields going higher. And you have to expect that this is going to go maybe into that 3.6, maybe come back and retest longer term resistance at 3 3/4. If we do get a more significant move like that, that's obviously going to put pressure on equities. And you can see what that looks like here on the RSI and the momentum and the bottoming formation that we had here, all looking like this is going to turn around at strong support at 4.24, which has acted as support here on December 7th as well as December 15th. So strong level of support, strong correlation of bullish momentum, which again says to me that equities should be moving lower over the course of the next week. Moving over to the put-call ratio just for a moment, I do want to highlight that we are in this lower sector here, generally where you would expect it to be after a pretty substantial rally. This is generally in the zone where you would expect it to reverse. We've seen things like this, like the August high where we were in this lower quadrant as well. And if we do see this push higher, like you would expect to based on this down move, it's kind of hard to see, but a slight down move here broke this resistance line into this lower sector. And if we do see a bounce, especially through this line here, that could be an indicator that we're going to move down, at least in the short term. Moving over to the dollar on the 4-hour chart, showing some big moves here, going from 101.92 all the way up to 102.33. This is the Monday price action. Not a lot of volume, but did see that breakout of this trend line. So interesting to see that here. Did run out of momentum. Does seem like we're getting a slight downturn here. Come back in, retest around the 102.25. We get a bounce from there, and we break this next resistance line, currently sitting at 102.68. Get a push back up to the 55. That's going to be bad for equities, and that does correlate with the things that I've been talking about. If we do come into this zone and we get rejection, that could indicate that the down move in equities is just about done, and that's something that we have to be looking for if you are trading bearishly on equities like I am. Moving over to the VIX on the weekly chart just for a moment here. I do want to highlight that we have a stronger RSI reading on the weekly close that we had last week compared to the low that we had on the week of 28 November. RSI was sitting at 38.78, whereas RSI on the close of the last week was at 39.28, despite the lower price action, indicating that we should get a bounce from this level. This trend line has actually been quite strong. I'm surprised I didn't notice it here before. Multiple interactions here through May and June. Gapped through it a couple of times here. Was support once again on 28 November, and then seems like we're going to get support here on the 9 January week. And if we do get a push higher here, that should indicate lower prices in equities. And it does seem possible based on this level. If we do gap through it or anything crazy like that, that does seem like we're going to go higher in equities. So keep an eye on that. We're right at support. Look for the bounce, but if we do break through, it might be time to take off any short positions that you have going into the week. Looking at my positions real quick, I have one covered call in my IRA, a couple of naked calls in my individual account, plus 2 covered calls here in that account as well. Talked about these multiple times. Check out my previous videos from Friday and Sunday if you want to know more about these. Those are my positions going into Tuesday. Let me know in the comment section what you think the markets are going to do tomorrow. Definitely like and subscribe if you got any value out of this video. I'd make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. I've been getting a lot of support recently, and I really appreciate that. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.